Good morning, Forex family. And it's Joshua with WinMoreForexTrades. I missed the upload the video yesterday. I had a pretty busy weekend and had got called in to work early. But I do have to leave here in about the next hour or so. We're gonna make this quick. Go do some overviews. Go back and look at some of the analysis we made. We did the Euro CAD sale. We were up 65 pips. If you trade how I trade, I don't normally move stop losses, and I usually wait for the market to actually finish the movement on the Fibonacci swings. We're gonna take a look at it and probably look at some new. If we have enough time, we'll look at another trade. But right now, we're gonna go through some of the analysis that we've made already, and we finna get into it, right? All right, we back. Um, right here, let's get into some of these NZD currency pairs that we went through already. We went through the NZD USD and the NZD CAD. So here's USD, NZD USD. This is the weekly time frame. We did have some sideways movement. We do have a downtrend inside of this consolidation range. The market is on the backside of their support, but it's up inside of the support right now. And we were buying since the market entered back into the consolidation range. So that's it. That's simple. You want to sell resistance and buy support. And NZD USD daily time frame. We did have a bull crown here, and we had a bull crown here. We bought the market at a high price. The market did fall, but we do have our stops 10 pips below the 8, and we are targeting the 1618 D extension. And as you can see, the market did come down. We were waiting for the market to test the uptrend line. Market didn't actually touch it, but we did get our movement, and then the market went up. Then we came back down to a nice low price. Then you could have bought the market again, and now the market is starting to head up. So if you guys missed that, hopefully you guys got in. You uh, should have two buy trades. Should have this trade here, and then should have that buy trade right there. And right now the market is too high at the moment, and the stochastic is overbought. So you want to wait for the market to reverse a little bit, get you another low price, and you want to wait for those counter trend line breaks. And as long as the market is in the buy zone, that's our take profit 7303. That's what we want to target based off the Fibonacci on the crown. But wait for that stochastic to get back in the oversold, and wait for that counter trend line break. And there wasn't too much analysis on the 1 hour time frame, because this is a trade based off of the daily time frame. So this is going to be more of a swing trade or a position trade. So it's going to take a while for this movement to happen, if it's going to happen. But be sure to take your profits along the way. You don't have to hold the trade as long as it's going to take to get up here. Take your profits up, take your profits down, take your profits as you see fit. And that is the NZD USD. Let's go look at the NZD CAD. Um, all right, so let's get the full screen here. All right, so NZD CAD weekly time frame. Um, let's see. Didn't look like we had too much analysis on this, or um, did some charts fall off the map. Okay, because the NZD CAD, I believe we were looking to sell this market. We're looking to sell the NZD CAD. Okay, yeah, actually, yes, there it is. All right. So we do have a downtrend. We have a down AB Fibonacci swing. We have a, let's bring in this horizontal line here. We do have a 618D extension. We haven't, I mean not 6, yeah, we do have a 618 retracement because we haven't hit this blue line yet. So we have a we still have a 618 retracement. So we want to go and target that down there. But the 1618D extension way down there, but that would take a long time for that to happen. But right now, um, let's get that off of there. Right now we do have our downtrend line. The market is going up to a nice high price, and we were going to wait for a so I'm wait for a counter trend line break. And actually, do we have a counter trend line break? Well, do we have an uptrend? Okay, we did have an uptrend line that has been broken, so the market has actually entered back into the sell zone. So the overall movement on this market is bearish. So we're going to the daily time frame, and we look for high prices and low prices. And here we did have a down AB swing that's still intact. Didn't have any crown formations, but the market did break this downtrend line. Then the market was in the buy zone. Then it broke this uptrend line, entering into the sell zone, and now we had like some sideways movement, and we had a descending pennant that formed right here. But now it looks like the market has broken. We had a false break here. Market broke back down into the sell zone. Now the market has entered back into the buy zone. So with that being said, we can gauge, to help us gauge where we would want to go, we bring in a Fibonacci at the lowest point, and you can see right there we have a Fibonacci swing. If this Fibonacci was to fulfill, it would take out this A, and we would possibly have a crown formation. So overall market movement is bearish, but at this moment you can see that we might have a buying opportunity as the market has entered into the buy zone. That is a high price, so you wouldn't want to buy that right now. So you do have your signal with the market breaking that downtrend line, and you're holding that support here. So you had 3 levels of support: support, support, and support. And actually, let's circle that off so you can see it. Now see, you had support there, had support there, and support there. So the market held at that price point, and now we've broken this downtrend line into the buy zone. So you start looking to buy the market up to, and actually that looks like that is a 8-6 retracement. So when we have an 8-6 retracement, we target the 118. So let's bring in the horizontal line. So we want to go after this 8-6, this 118D extension with an 8-6 retracement. If you would get there. All right. So with that being said, stops 10 pips below the A. How much risk is that? 10 pips below the A, that would be about roughly what, about 237 pips risk, and right now I'm going to get 240 pips. So that's about a 1-to-1. Like I said, you guys, you always want to keep your risk to reward ratio. You always want your reward to be higher than what you're risking. So we can go down to the 1 hour time frame. We have broken into the buy zone, and actually let's see here. We've broken into the buy zone, and what do we have on the 1 hour time frame? And as you see on the 1 hour time frame, we did have a bearish crown. We got a bearish crown here. We have our left tip, we got right tip, and then the market actually had failed, and then the market retested that right tip again. Now the market's going to fall. Now, based off of the right tip and or based off of this crown formation here, um, as you can see, the market could be going up to retest this right tip. Retesting the left and right tip for resistance. Market likes to revisit price points, and it does the same thing over and over and over again. Like I said, you can see right now that blue line right there, that is the left tip, and that price point has been holding resistance. So based on this, off of this crown formation, if we were going to buy this market, we want to wait based off the 1 hour time frame. What you want to do is we want to wait for the market to do something like this. Actually, we can use that color. Just make it bigger. From where the market is right now, you want the market is going to move in waves. So it's probably going to hold resistance there, then come down. Wait for the market to break that resistance point. Come back and test the backside. Let's get rid of that. That's my alarms letting me know it's getting close time to go. But now we still got 30 minutes. So, alright, you want the market to come up, probably hit that resistance point, come back down, then you want it to come up or break through the resistance point, and then come back down and hold that right tip and left tip of resistance and hold that support. And once the market holds at support, then you want to come through and you want to alright, there's two. Alright, the market will hold that resistance point as support. Then you want to come through and you want to buy the market when you have that counter trend line break, like so, right there. So when you see the market does something like that, and if it's going to hold that resistance point, you can buy the market off a counter trend line break. It's a daily time frame. We do have the downtrend line has been broken, and we are now inside of the buy zone. And right there you have a Fibonacci. Right there you have a Fibonacci. And let's see, 1 hour time frame here. That 1618D extension, how many pips is that away? I mean, not how many pips is that away, but when we look left, does the market have any resistance? Does the market have any type of reaction off of that price point? As long as you can look left, and you can see right now, you done had resistance there. You got more resistance. Market holding that price point all through. See if we can zoom in here just so you can get a good look at it. Right there at that price point. You can see all that resistance right there. What happened to it? Okay, yeah, there it is. Right there. All that resistance. So we see the market has a good relationship with that price point based off the 1 hour time frame. So, but right now, market is too high to buy. We want to wait for the market to give us a low price. Even if the market gives us a low price here, it doesn't actually break resistance. But this is kind of what we were looking for in order to start buying the market. And still, even if you bought it here, yeah, go for 52 pips, and you want 10 pips below the lowest point of U-turn. 10 pips below the lowest point. So that's a good scalp trade. Risking about 25, 30 pips, go and get 50 pips. So now you're going after 50 pips and only risking 20 or 30 pips. So that would be a pretty good trade right there. But based off the trading for Fibonacci's, you do want to put your stops 10 pips below the A, because if the market doesn't take out the A, it has no choice but to go your way. So, but that's the NZD CAD. Let's go look through the. Let's go look at that Euro CAD sell trade that we were looking at. If the charts would go ahead and switch over for me. Let me check something real quick. Okay, we're good. We're good. All right, so this is the Euro CAD. We did have a sell trade going on here, and right now, what is this? All right, so the overall movement on this market is bullish. As you can see, we do have an uptrend line, but recently we've been kind of on a downtrend. So we do have a down Fibonacci swing. You got a down AB Fibonacci swing. We do have the market hitting the 8-6 retracement. So we're looking to go down to sell to this 118, the extension, as the market already has passed support at that price point. And we do still have downtrend lines that haven't been broken, as is being respected. So, but the market did start to reverse a little bit. So, like I said, the overall movement is bullish because we're still in the buy zone, and the market is in the buy zone. We do have an uptrend going, but right now the market is going to retrace down to go test this uptrend line again. So overall movement is bullish, but we were selling in the meantime. We were selling short term and buying long term. So, and on the daily time frame, as you can see, we do have that uptrend line here. We do have an up AB Fibonacci swing, and we did have this down AB Fibonacci sub swing inside of this up AB Fibonacci swing, and that was the 1618, the extension. And we were, how close were we? We were like almost 30 some pips away. Then the market started to reverse against us. So, with that being said, the stochastic is almost overbought, and kind of looking to. I'm still gonna hold that sell trade. Still gonna hold it, and because nothing is telling me to close it right now. It just looks like the market's just kind of reversing, correcting itself, and I'm gonna hold my trade until we get stopped out, and then still look to sell to that 1618. Because as long as we have this down AB swing, if we get stopped out, we just look to re-enter in another sell trade again. So, and here it is right here. This was the trade that I actually drew up the other day on the last video, I believe it was. And as you can see, we did have a counter. Did have a counter trend line that was broken. Then the market fell, as if it was going into our favor immediately. Now, in this instant, a lot of traders, they will take their profits, and there's no problem with that. That's what I would advise you to do. Take what the market gives you, because as you can see, the market can go in your favor, but not go around and all the way hit your take profit, and then it will reverse and almost stop us out, because we 10 pips above the highest point of the break here. So we didn't. Yes, we did have a bearish crown, but that bearish crown, it fulfilled, and that is the price point. That is the 618 price point that fulfilled. but the market still has been playing around with that price point right there. But we did have a new uh, 618 D extension that was down here. So based off of that, that's where we were going, and that was our take profit. But the market did reverse against us. Now we're just still holding, and if we do get stopped out, which is just a few pips, that's about 8-9 pips away before we get stopped out. But if the market doesn't stop us out, we're still going to target this price point, and I'll just keep that up. We'll keep it up for training purposes. Like I said, guys, take your trade, take your profits. No need to hold a trade if you're not a position trader like me. There's no need to hold a trade. You get profit, you take it. Take what the market gives you. But as for me, I'm holding that trade right now. So that's the Euro CAD. What else? What other analysis did I do? Try to keep my eye on the time here. That's Euro AUD. I don't really have enough time to actually go through another trade, so I'm just trying to find all the trades that I actually have done already. And this is Euro USD. I think we went over this one the other last time. Euro USD. We did have a up. Okay, we do have an uptrend here. Market broken that uptrend. We're in the sell zone. So direction of this market is bearish, and there's your down Fibonacci subswing inside of this up AB Fibonacci swing. That is your target. Market is reversing on the stochastic, so direction right now is bearish. So we want to sell long term and we want to buy short term. We do have a crown formation on the daily time frame. We got a bear crown. And then you have the market breaking into the sell zone at the right tip of this bearish crown. So we want to go down to the 1618D extension. But the market has been stubborn, and the market is wanting to go sideways. And we got us consolidation support and resistance. So with that being said, we've been selling resistance and we've been buying support. So that will give us the idea of what we wanted to do. We want to buy support. So, and as you can see, if you would have bought support down here, market been going in your favor. Last 1, 2, 3, 4, 5, 6, 7, 8, almost the last week, market's been going in your favor. So, Euro USD 1 hour time frame. Go to the 1 hour time frame. We can see here that we did have a crown formation. That Fibonacci 1618 D extension off of the crown was hit, and then the market started to set itself up to reverse, and then we broke those trend lines and we entered into the buy zone, and now the market is in an uptrend based on the one hour time frame. And so we're just taking little bits and pieces in Fibonacci swings going up as we predict that the market will go back up to consolidation resistance. And that's Euro USD. That's pretty plain and simple. Let's see, did I did any analysis anywhere else? Any more analysis that I missed? Okay, yeah, we went through the Euro CAD already. Now I got some charts that I haven't actually went through, and I'm probably missing some good trades out here, man. Need to go ahead and go through all the currency pairs and look for some good trades and start sharing them with y'all. But okay, we went through the NZD, we went through the Euro, and actually, yes, we do have Great British Pound. We do have the Great British Pound, Canadian dollar. Okay, let's look at the Great British Pound, Canadian dollar. Okay, we did have an uptrend. Market broke in this inner uptrend, so overall direction is bearish because the market breaks the trend line, it will gravitate towards the next trend line. But we have a consolidation, we had resistance, and then we had support, and now the market has broken that consolidation resistance, and it's starting to head up. So with that being said, we don't know if the market wants to hold this point of resistance, because we still have a lot of resistance up here at this price range right here. Let's see. Let's bring in horizontal ray, and you can see it right there, right now, live, live on camera, live on the broadcaster, XSplit broadcaster. That's what I like to use, and well, that's what I'm using right now. That's the only one I know how to use. But this is the resistance. You got resistance, 1, 2, 3 points of resistance right now, and then you see the market reversing based off of this weekly candlestick. So the market could be holding at that resistance point. So that being said, we could be looking to start coming back down. So let's just look for sell opportunities. Okay, so on the daily time frame here, we do have a bearish crown. You got your left tip, and there goes your right tip, and look how the market again right now is testing that right tip of that crown, and then the right tip of that crown, the right tip of this crown formation is exactly identical with the support, with the resistance level on the weekly time frame. If you guys can see that, which gives me a strong indicator that the market may fall to the 5572 off of that the Fibonacci 1618D extension. Yes. So with that being said, I'm still looking to sell this market, just waiting for the entry points to happen. Now, this is what's real tricky with the British pound pairs. Now, we did have a counter trend line that was broken, and then it's broken with a bearish candlestick. Now, that's your signal right here. This is the signal you're looking for when you want to sell based off of the strategy. When you see something like that happen, it's like, okay, there's my signal, time to start selling the market. And then boom, the market just reverses and stops you out and just kills whatever profit you had going at the moment. Because here, and in the previous video, now I'm starting to remember, in this previous video, you guys should have been able to see that this uptrend line actually was not drawn like this. Based off the last video, this downtrend line was not drawn like that. And you can see where the market is actually, where this chart has actually been messed up. Because this was supposed to have been a false, that trend line was supposed to look like a false break here. So actually, let me see if I can redraw that. Because before the market fell, the trend line was, oh, I already extended that one. So let's just get rid of it. No, it's unextended. Okay, so that trend line wasn't like that. Actually, this trend line here. So can I move it? Okay, so I can't move it. So let's just get rid of it altogether. And then we're going to draw the trend line out again, because that trend line actually did not look like that. So that's our touch. And at that point, this was the highest point of the market right here. So that's what the trend line actually looked like before the market actually switched it. The chart switched it on its own, because we do put smart trend lines in, and then the charting system actually does change the trend lines based on the market movement. But that trend line would have looked like this. So now, yes, of course, since that trend line did break, now the charting system is correct. because we would have got rid of this trend line once the market had already broken this trend line. We would have already got rid of that, and you could see where the market came down and then came up and tested the backside and then actually fell some. So and then that's the signals we were looking for, once we break the trend lines. So with that being said, we can go ahead and we kind of clean this up a little bit, since the market actually did do that, but then we just had a big old reverse that just happened, and you have to be real critical about the British pound pairs, because that's a lot of stuff that happens when it comes to trading the British pound. So keep my eye on the time. It's 5:20. I literally only have 10 minutes before I have to go to work, but we're gonna get it done. Okay, so that was what the trend line looked like before. We did have a false break, but then the market broke down, tested the backside, and then fell again, but then found some level of support here, and then the market just reversed and crashed right into that 1618, the extension. See, now that's what's important about the crown formation. That's why we don't want to. That's why you want to make sure that the crown, this A gets stopped out, or if the market takes out the A. Now, placing your stops 10 pips at the lowest point of U-turn when it comes to a counter trend line break, that's good and dandy if you don't want to, if you're not gonna hold the trade all the way through. But as you can see, even though the market did break this uptrend line, tested the backside, then started falling, the market still went up and just smashed right into this 1618D extension, and you can see the market reversed already based off of hitting that 1618D extension. If the market doesn't take out the A, it has no choice but to go your way. But hey, that comes with Fibonacci. That comes with trading the Forex, and you have some wins, you're gonna have some losses, but you just gotta keep your losses small. Keep your losses small and just keep your wins big. And like I said, you see, that's all that resistance there, based off of that, the crown formation, off of the daily time frame. So, like I said, still not worried. The overall movement, I still believe, is bearish, because we still have this crown formation here, and that right tip is just resistance of the resistance points we have here on the weekly. And you can see we have those resistance levels there outside of this consolidation range that we marked off. So we could be looking to sell, and I'm still wanting to sell based off of this crown formation on the daily time frame. It's just waiting for the right entry points. You're gonna have some losses and you're gonna have some wins. Just keep your losses small, and make sure your equity management is in line. Make sure you're not over trading. Make sure that you're not over here. You going in at 10 lots, and you just got $1,000 trading account. You'll lose your account within a matter of seconds. So just make sure your equity management is in line. Your risk to reward ratio. Make sure your reward is always higher than your risk. Always go for more. Always go for double or more for what you're risking. You're risking 25 pips. Hell, go for 50 pips. Go for 75 pips. Or if you get to 25, 35, take your profits. So, but again, it's all up to you. But this is the trading strategy, man. I hope you guys enjoyed it. This is the video that was for Monday, but it is Tuesday right now. Tuesday, February 26th. So I'm just gonna put this up here on YouTube or Facebook or wherever y'all see this video. It will be on my WinMoreForexTrades website. And the WinMoreForexTrades website, it is getting a complete makeover, because we just got the SSL for this. We got the site security for the website, so we have to go in and change up some stuff, and then probably move some pieces around on the website. So the website update is coming. You guys stay tuned. Hopefully you might see it on the sponsored ad on your timeline on Facebook. and hopefully you want to join on with your boy when it comes to this trading strategy of trading forex. But I'm gonna get up out of here, man. I gotta get ready for work, and I don't want to be late. And I'm gonna see you guys in the next video.